commodities have also been reeling under pressure, whipsawed left, right and center, up and down because of all the tariff headlines. So let's focus on this recovery that we're seeing this morning. We have with us Peter McGuire, CEO at trading.com, for some thoughts. Peter, I wonder how your last couple of days have been. How are you feeling? And, you know, for the oil markets this morning, again, we're seeing some recovery. We're seeing about 64, 65 back on Brent. But China is retaliating. I mean, and that war of words is only escalating. So if you're looking at a real trade war between China and the U.S., then is oil already at the base now with this decline, or do you see more downsides?
Well, good morning, Sarabhai. I mean, you know, what we've seen since Sunday night Sydney time, it was electric because the markets come on and you saw the futures and it just went absolutely cratered. And then, as Prashant said, you know, that big swing that we saw yesterday on that news, which wasn't actually news, then that really demonstrated, I think, the sheer volatility. Now, the energy markets, you've had them, when we think about what we've lived through, we've got President Trump threatening, and he's really looking at, you know, additional, as it says there on the screen, 50% to China. China's coming out and it's not backing down either. So this is going to be a very, I think, incredible geopolitical situation, how it plays out. I don't think energy's down 15% off in a week. I feel as though it's had a bounce, and it's no doubting that. But I think it's absolute. I think the velocity of what we saw, and it is in a downward trend. I expect energy prices to actually go lower than what they are at the moment.
Oh, gosh. So you're saying even after 15% decline, it's not all in the price, if indeed this is a full-blown trade war. So how much lower?
Well, I think I've got to be considerate as far as what OPEC mentioned last week. There's the first part. I still think it's got a mid-50 handle. I'm seeing, you know, the guys that I talk to and you know, the teams that I talk to across Middle East and so on that are independent oil analysts, many are calling 45 could be the handle. I'm not prepared to go that low, but I still believe that Nymex, WTI, it's got to have a 50, 57, 56. If it gets through there, then I think you're going to see a push lower. But we've just got to get to that sort of number. But I feel as though that downdraft is going to continue. But again, there are many ways to get there. You know, I mean, the volatility that we've seen, it could be up another 3 or 4% today, and it could be off 6% tomorrow. Who knows?
Mm-hmm. Hi, Peter. Morning. Always good to have you on the show. What about gold? You know, it was glittering all along, and then, you know, this sort of a meltdown and some strength is what we have seen on the dollar index. Gold has pulled back as well. Where is that one headed?
Yeah, you betcha. I mean, you know, 102.90, lovely to see you, Nigel. I mean, you know, what you've seen, 102.90 for the US dollar index, gold sitting, you know, 3,010, 3,015. It certainly was sold off, and there was no doubting that. Silver as well, down to $28 from, you know, this time last week, I think it was near 35. So it was really cratered, and silver's bounced as well. It's back up at $30.10. So I feel as though you would have had, don't forget, as Prashant mentioned, you have to take on board, there would have been algorithmic trading and a lot of margin calls yesterday, and that would have really impacted with big swings, people having to liquidate positions. So gold was probably, I would say, liquidated. You've had a big push down, and I think that, you know, it will resume its upward trend, but they're in these times of much volatility, and that's what we've lived through in the last matter of days. It's not unusual to see every asset class get tanked. Have a look what happened to the 10-year. It was down at 389. Now it's up back at, you know, that 415, 420 sort of handle.
Okay. All right, Peter. Thank you very much for that quick analysis. Let's see what the next couple of hours and days bring. Thank you for joining in today.